Hello listeners, and welcome to a MakCorp special podcast where we're going to interview Jerko Zuvela, CEO of Argosy Minerals, ASX code AGY. And without further ado, welcome Jerko, and thanks for joining us.
Thanks Steve, much appreciated.
So today we're just going to go through an overview of your company and projects and its people, and give our listeners some insights, or refreshing if you like, on where the company's heading, and what's happened in the past with the company. So let's start with your story and how did Argosy eventuate, start, and where did you get the project?
Yeah, it goes back a few years ago. Argosy got probably merged into another company, which then we were able to take out of back in 2014, recapitalised, and then sort of late 2015 to early 2016 we identified probably lithium as a commodity or a mineral of interest, amongst a few others. But
Nice and early,
reasonably early. Obviously there'd been some that had stuck around from the previous wave back in the late 2000s, early 2010s. But yeah, we identified lithium as an interesting mineral. We had a bit of a look at projects across Australia in the hard rock space. I think Pilbara and what's his name?
there's a few in WA.
Who was it? Pilbara.
Atura?
No. Altura James had identified that they had something at Pilgangoora, and Neil Biddle at Pilbara had probably identified they had something there, and that probably on the scheme of things that looked pretty positive for them. We had a bit of a look around Greenbushes, but I think that's probably hard work down there, given I think the history's been there a long time. Sons of Gwalia and all that before, and they would have identified all the better stuff. So in early 2016 we sort of looked elsewhere around the world, and given the lithium triangle was the main source of lithium chemicals supplying into Asia and the world, we thought, well, that might be a good place to go to. So we came across Argentina. We found some good people in Argentina, and after a few months, by mid 2016 we'd signed up an arrangement with our local partner, who's now Pablo Alaralde. The project that we identified there has been able to turn into the Rincon project, where we've been working on for the last 4 years nearly, since early 2017. So it's been quite a ride. Obviously the last couple of years have been a bit tough with the lithium sector being in the doldrums.
Yeah, up and down.
But we've been really just trying to advance the project as quickly as possible, and with our expertise and experience, especially with the local team, we're trying to develop it as quickly as possible into production.
Let's talk about your team a little bit. What sort of experience do they bring to Argosy?
Yeah, like I said, our main local partner is Pablo Alaralde. He was the Director of Processing and Technology at FMC in Argentina for 15 years, from 1997 to 2012.
That speaks volumes.
Absolutely. He developed their technology, he developed their patents, and in the early 2000s when SQM, across the way there, dropped the price of lithium from $3,500 a tonne to $1,700 a tonne. FMC and the predecessor to Albemarle, Chemetall I think it was, or Rockwood, they went out of business overnight because SQM, given it was effectively a byproduct, they dropped the price. It didn't really matter to them what the price was, and put these other companies out of business. And FMC was out of business
with some other commodities as well.
Yeah, that's right. So FMC was out of business for a while, and it was Pablo that retweaked their process to get them back economic and start being able to produce and sell and make a profit at $1,800 a tonne. So they had to do that for a little while longer.
Fantastic
until SQM, gave up a little bit on the low pricing methodology, and the price increased back to $3,500 a tonne. And then obviously Albemarle or Chemetall, Rockwood, whatever it was in the time. So again, Pablo's experience is second to none. He spent 15 years there. He tried to obviously get his Rincon project up and running after he left FMC. That's why he did leave. And unfortunately, I guess the lithium wave had sort of expired by about 2013, and Argentina probably was still a bit of a difficult place for foreigners to invest privately or into private enterprises that Pablo was trying to do. And lucky enough, like I said, a few years later we came across him. He was looking for an investor. We were looking for a good local partner with experience in lithium, and
a good fit.
And it's been a great fit. His family is second to none. When I go over there, family, birthdays.
Extended family.
It's extended family. Yeah, we get on fantastically. Like I said, it's
And your other team members over there? Anyone
well, a lot of the family. Pablo's son's an industrial engineer. His son-in-law's an industrial engineer, so they're both in the business. His daughter's a CSR, community relations expert. Her and her
you got all the right connections.
All the right people there. One of the other younger chemical engineers that we've got that's running the pilot plant. He's a sort of family friend. So again, it's all about protecting your IP, and that's what Pablo's been very cognizant of, and that's why we've sort of kept it, within the family, I guess you could say. But it's just the works that they've been able to do and the strategy we've been able to follow. I think hasn't been wasn't done by anybody else, and it's probably others have struggled to replicate it. So I think we've gone about it the right way. We've spent money where it needs to be spent, and we've had a bit of success. Pre-2018 or early 2018 up to then. And then obviously it was a few hard years for us. But really, the advances we've been able to make, selling product into the market, building the pilot plant, getting Mitsubishi on board. Again, it's all about doing the right things, like you said earlier. Following through with your strategy and try to develop the project as quickly as possible.
Now, one of the questions I get asked a lot about Argosy's project is the commercial viability and expanding the resource. Yep. What's happening in that space? Yeah,
and that's been obviously mentioned to us a little bit as well, Steve. Obviously the resource compared to a lot of our peers is very much on the small side. But saying that, we've got a small tenement holding compared to maybe some others. But as part of that strategy for how we started our works, we obviously spent a lot more of our budget on building the pilot plant, the evaporation ponds, and so forth. So the limited budget that we had went into drilling. So we only drilled down to 100 metres depth, and that's what's delineated the resource, which from our PEA works has outlined a mine life of 16.5 years at a 10,000 tonne per annum production rate. Now many others have probably got PEAs that outline a lot longer mine lives and a lot larger production targets. But as I like to remind a lot of people, Orocobre has only really been producing for a long time at about 12 to 13,000 tonnes per annum. FMC Livent now is only producing about 15,000 tonnes of lithium carbonate per annum at the moment. So to go and build anything bigger in Argentina, it hasn't been done before. So I'd rather walk before I can jump. But saying that, it's only we've only drilled the resource to 100 metres. We put an exploration target out a couple of months ago, which had a target between 100 metres and 300 metre depth of brine, and we think we can probably go and increase that resource, perhaps up to close to 724,000 tonnes combined current resource plus the exploration target, up to that amount. So if we think we can get to that, and then we
what sort of extension on the mine life would that potentially offer?
We haven't obviously done that work yet, but I'd like to think that we could increase the mine life, pushing up to 25 years and probably doubling the production rate. So
and becomes commercially viable.
Yeah, I think it's commercially viable now anyway. At 16.5 years at 10,000 tonne, because we're building it building our plant in a modular fashion anyway. So you can always increase the production rate. And like I said, we all know where the resource is. Salt Lake. It's in the Salt Lake. It's not hard to find. And some of our peers on the ASX have probably drilled down to, or even the Canadian peers have drilled down to 500, 600, 800 metres. So there's plenty of room to go if we need to increase the resource in future years. But we are definitely focused on that, and we're actually working on it as we speak. I think we put an announcement out about a week and a half ago to say that we are preparing works to start that drilling as soon as possible once everything.
And is COVID affecting that at this stage? Or?
No, listen, we've been lucky, touch wood, that things up in Salta province have been pretty well handled. Obviously, they've still got their local cases and so forth, but a bit like here in WA, Salta's a mining province, and their government has really been positive and proactive in allowing mining operations to continue, albeit under restrictions and certain measures. So we've been able to sort of continue our works. We did shut down the plant for about a month back last year in March or so, but we pretty much started.
Precaution at that stage.
Yeah, well, listen, we were taking instructions from the government, but since then, no, it's been a few little minor hiccups, but apart from that, we've been able to generally do what we need to do. A few little delays here and there,
But overall, the whole area seems to be active.
Yeah, absolutely.
Which is great.
Yep, Salta Province has done a great job. Yeah.
Excellent. Now, as far as offtakes, where is Argosy at with their offtakes?
Yeah, obviously we spent a lot of time trying to sort of find a strategic off-taker or partner to come in and assist with finance. I guess, lithium projects are very hard to finance. The traditional banks and finance groups, as we've seen, haven't financed any new lithium projects in the last 5 years, and the ones that have been financed, you know, with Orocobre, Toda Susho assisted in that, and Lithium Americas has got Ganfeng. So it's been strategic groups that have invested to build lithium projects. So that's what we need to do. I think that's the only way to get finance to build new lithium projects, given, like I said, the difficulties to secure traditional, you know, mining finance arrangements like the rest of, you know, the companies in the mining sector. We just don't have that available to the lithium sector, unfortunately, at the moment. Hopefully that changes sooner rather than later. So we've always tried to tie, you know, strategic offtake with strategic investment and some sort of financing.
Working partnership.
Yeah, and unfortunately, obviously, while lithium prices have been low, you know, none of the investors have probably been very keen. A lot of them, you know, some of them did make some investments back in 2016 and 17, and you know, they came to nothing because no new product came to market. So a lot of those prepayments, and you know, we've seen failures like Nemaska and North American Lithium, and you know, unfortunately here in WA, Altura and Alita failed because, you know, they've taken on debt and haven't been able to finance their projects correctly. So we've been very cognizant of that. We want to, you know, be around for the long term, so we've been very cautious. So what we had to do with our last raising, we had to go to the equity markets. But what we're trying to do now is probably link up the 2,000 tonne per annum offtake with working towards a 10,000 tonne offtake that we've got a PEA for, and that's the sort of next step in the project development.
So watch this space.
To try to line up, you know, some sort of strategic investment to help us get to the 10,000 tonne per annum stage as well. Because, like I said, going from a 2,000 tonne with a $30 million capital raising is probably achievable in the current market, but to try to build a 10,000 tonne per annum project with a capex of 140 million US, that's a little bit more difficult to achieve for finance purposes. So we're definitely working on it. Obviously, we've got good relationships with Mitsubishi. We've got a heads of agreement for the 2,000 tonnes per annum with them, non-binding. So we are flexible. So we are talking to various Japanese groups. The European sector's come alive in the last couple of years with their push towards green technology and EVs and so forth. So there's a few interested parties over there as well. So like you said, watch your space. Probably similar to what we've been telling our shareholders for a couple of years now, but you know, given the interest in lithium, that's really retweaked or repeaked.
And it is a long-term strategy and investment.
Yeah, but you know, you'd like them to jump on board, because as we're seeing, you know, the lithium demand is going to keep growing, and we're very bullish on it, obviously. And you'd like to think there's a few groups out there with deep pockets that can make those decisions and make those investments. But you know, as we're all seeing, you know, no other lithium companies have been able to do it, so it is a bit
challenging.
Yeah.
Let's talk a little bit about the differences between brine and hard rock.
Yeah, obviously we're in brine, and you know, brine's been the traditional source of lithium chemicals for, you know, the last 30 or so years, mainly SQM, you know, what's now Albemarle and what's now Livent, and obviously Greenbushes has been the other sort of primary source of spodumene or hard rock in the world, obviously, because that's an extraordinary resource. Over the last 5 years, we've seen, like I said before, Pilbara and a few others in the spodumene world move forward. We've seen a few, you know, in other countries in Europe and Africa sort of try to take the next step as well. But I guess, you know, from our perspective, and what we've seen over the last sort of 2 or 3 years with prices falling, you know, it's been the lithium brine operators that have been surviving and thriving and continuing operations. So the big difference is the cost. Cost of operations, that's right, cost of product. And unfortunately, you know, the hard rock guys, and we've seen a few failures there, it's just because they can't compete on a cost basis with the brine operators. So, you know, I guess the brine operators, assuming they do it correctly, and it's the existing guys that I'm talking about, the SQMs, Livents, FMCs, or Livents and Albemarles and SQMs with Orocobre, you've got to be able to meet the market in terms of price. And if you can't, like we've seen here in WA, all the main hard rock guys have had to shut down or go into care and maintenance during the period of low prices. Now, hopefully prices are a bit more sustainable over the long term, but the real difference is, I guess, being able to, you know, convert your resource into a saleable commodity or a saleable product, which is a lithium
and make a profit.
Carbonate or a lithium hydroxide predominantly, and be able to be profitable. Exactly. Yep. So that's the main difference, really.
Well, looking at your top 20, which you have sort of touched on, from what I can see, it's very, very loyal top 20. Most of them, outside of a couple, have been with you for at least 3+ years. Do you want to talk about your top 20?
Yeah, for sure. Obviously, you know, I'm fully invested in the company, and through the family, we've got some interest there, and the guys that helped us recapitalise the business, you know, 7 years ago now, are still a lot of them in there and very supportive. I still talk to a lot of the top 20 shareholders from that have been there for 5 or so years. Again, they've taken a long-term view. They see that this EV battery technology, green technology, and lithium sort of product is going to play a long-term future in the way the world's going, and they believe in the upside. And they think we've got obviously a very good project and good management team and good local team to really turn this into an operation, a producing operation. And obviously the upside, if we can achieve that, given that Orocobre and even Lithium Americas to a degree, given they're sort of still in development phase, but they're 10 times even more the value of what we are currently. So there's plenty of upside to get excited about there for our shareholders as well. If we can do what they've done, hopefully we can achieve their valuations, which that's what our shareholders are sticking around for, because a lot of them would like to retire after we're successful. So if that's possible and we can achieve those valuations, and hopefully that's what they can do. But very supportive. But obviously we'd like to sort of get a lot more institutions on board, and I guess in the last capital raising we managed to do a lot of the placement via the strong institutions. So again, to build a good register, you need the long-term support, but also the larger institutions that can come in and help you achieve what you're aiming to do, which for us is building the commercial operation.
Excellent. And final sort of question, and long-term as far as ERP software, which sort of shows vision and belief in projects, is that on the agenda?
Yeah, listen, we'll do whatever it takes to ensure we're successful. Obviously, at the moment, we've got Pablo and his team that they've got their project management software, which I've got as well. So that sort of handles everything we've done. We've obviously got our, we've budgeted for we basically did the PEA off the back of the software that we've been using to estimate the CapEx and the OpEx. We've also done that for the 2,000 tonne scale project that we're looking to build now. So we've got a very good idea of that. But again, that comes back to our local understanding in terms of costs of plant and equipment. We built the pilot plant. We've got a very good understanding. The guys that, the plant and equipment that was built for the pilot plant will be the same guys that probably do the next scale, scale ups of the project. So we've got a very good understanding of that. The boys sort of obviously put that into their programs. But if there's anything else that can help in that regard, obviously we'll do. And as we move forward, not so much having confidence in the project, because we've got 100+% confidence in the project given the way we've gone. But anything that you need to do to scale up and further de-risk in terms of execution, we'll do for sure.
The focus over the next 12 to 24 months is building the resource?
No. Listen, we'll do a little bit on the resource, but really the 30 million that we raised is to build a 2,000 tonne per annum plant and get into production by mid next year.
Excellent. Bring some cash flow in.
Absolutely. Well, just build up the project, modular fashion to scale up, because obviously that's where we want to get to. We want to get to sort of 10,000+ tonnes per annum operations, and like I said, with financing being difficult to do that straight away, you've got to do it in a step-by-step approach, we feel, and that just de-risks certain aspects of execution, of requiring finance, of product qualification. Yeah, product qualification is a big one in the lithium sector as well. With lithium chemicals, you don't just sign an offtake like that, because the end users need to qualify your product, and that can sometimes take 6 to 12 months. Yep. And that's just another aspect of where we've been able to use our pilot plant to do some of that. Now, that's not the be all and end all, because the pilot plant's not going to be the plant that produces at a larger scale, but we're very confident that we can replicate the results and the product quality that we've achieved in the pilot plant with the scale up plants of 2,000 and 10,000 and further, hopefully. So we're able to we've sold over 25 tonnes of product from the pilot plant. We're sending hundreds of kilos of samples to various cathode manufacturers for that product qualification purposes and testing. And again, like I said, that's a lot of the things we've been able to do that a lot of our peers haven't been able to do, because they're probably more focused on the resource, whereas the lithium business is a chemical processing business, not an exploration or mining business. There's not a lot of mining to it. It's all about chemical processing, and that's really the key component. And then obviously if you get that right, you then need a saleable product, which is all part of getting the technology right, and then making sure that product quality matches what your customer requires, because if it doesn't, as we've seen in the past, you have Teslas blow up. That comes back to the components that are used in building the batteries. Yeah. And the cathodes are a main part of that, and the lithium chemicals or the lithium raw materials are a key component of that. So you need to get all that right. If you can't get it right, people...
And crawl before you walk, as you've already mentioned.
Yeah. Well,
and patience.
Well, unfortunately, we'd like to have less patience and be able to move a lot quicker because we're ready to go. But that's just the industry at the moment. Unfortunately, very, very
things out of
immature at
one's
the moment.
control.
Yeah, early stages in the whole industry.
Excellent. All right, look, it's been a pleasure talking with you, Jerko, and appreciate your time, and
Thanks,
hope our
Steve.
listeners get some good insight into Argosy Minerals.
I appreciate it. Thanks very much, and good luck to them.
Excellent. Thank you.
Thanks, Steve. Appreciate it.